Welcome back to the channel. I'm Algabot, your guide to the world of automated trading systems, and today we are breaking down a pure price action expert advisor for MetaTrader 5 called FVG Rejection Continuation. This strategy is built entirely around one of the most popular concepts in modern price action, the fair value gap, also known as a three-candle imbalance. By the end of this video, you will understand exactly how this EA spots an imbalance, why it waits patiently for a genuine rejection candle before entering, and how it calculates its stop loss and take profit. Let's dive in and see how it all works. So what exactly does this expert advisor do? At its core, FVG Rejection Continuation hunts for a very specific footprint left behind by aggressive buyers or sellers. When price moves so quickly that it leaves a gap between three consecutive candles, that empty space is called a fair value gap or an imbalance. The strategy treats that gap as an area where price is likely to react when it returns. What makes this EA different from a basic gap strategy is that it does not simply enter the moment price touches the zone. Instead, it waits for proof. It waits for a genuine rejection candle, a candle with a dominant wick that pierces the gap and then closes back in the original direction of the move. This is a continuation idea. Catch the pullback into the imbalance, then ride the trend as it resumes. The EA keeps the signal honest using three filters. The first is displacement, which means the middle candle of the trio must have a large body relative to recent average range, proving a real impulse created the gap. The second is freshness, which means the gap must be mitigated within a limited number of bars, and it is discarded if price closes fully through it. The third is the rejection wick itself, which must dominate the candle body on the mitigation bar. Importantly, this strategy uses no technical indicators whatsoever. There is no moving average, no oscillator, nothing. Even the average range it uses for filtering is calculated by hand from raw highs and lows. This makes it well suited for traders who want to study clean, structural price action, and for anyone curious about how smart money concepts can be translated into precise, rule-based code. Remember, everything here is for educational purposes only and is not financial advice. Let's walk through the logic step by step. The EA acts only once per fully closed bar, so it never reacts to noise inside an unfinished candle. On each new bar, it looks at the most recent trio of closed candles, which we will call Candle 1, Candle 2, and Candle 3. Candle 2 in the middle is the displacement candle. For a bullish gap, the strategy detects that Candle 2 closed higher than it opened with a body larger than the displacement factor times the average range, and crucially that the high of Candle 1 sits below the low of Candle 3. That empty space between them is the bullish fair value gap. The mirror image is true for a bearish gap, where a strong down candle leaves the low of Candle 1 above the high of Candle 3. Once a gap is tracked, the EA checks freshness. If the gap is older than the expiry bar's limit, it is thrown away as stale. If price has already closed fully through the gap, it is invalidated and discarded. Only a fresh, intact gap survives to the next stage. Now comes the patience. The strategy waits for price to return and tag the gap. For a long, the newest closed candle must dip its low into the gap. It must hold by closing back above the lower edge, and it must print a rejection candle, meaning it closes higher than it opens with a lower wick that is at least the wick factor times the candle body. When all three conditions line up, the EA signals a buy at the current ask. The stop loss is placed just below the lower of the candle low and the gap floor, minus a small buffer derived from average range. The take profit is then set at a reward to risk multiple of that stop distance, defaulting to 2 times the risk. For a short setup, everything flips. The candle must poke its high into the gap, close back below the upper edge, and print an upper rejection wick that dominates the body. The EA then signals a sell at the bid, places the stop just above the candle high or gap ceiling plus the buffer, and projects the take profit downward at the same reward multiple. Only one position is held at a time, and from there the stop loss and take profit manage the entire trade to completion. Let's read through the actual MetaQuotes language code you see on screen, just as you would inside MetaEditor. At the top are the input parameters. Lot sets your fixed trade size. MinDisplacementFactor controls how large the middle candle must be relative to average range, so raising it demands a stronger impulse and produces fewer but cleaner gaps. Rejection-wick factor sets how much the rejection wick must dominate the body, so a higher value insists on a more convincing rejection. TakeProfitRR is your reward-to-risk multiple, here too, meaning the target sits twice as far as the stop. Stop buffer multiple adds a cushion beyond the structure, so a tiny overshoot does not stop you out prematurely. Expiry bars limits how long a gap stays valid, and range loopback sets how many bars feed the hand-rolled average range. Now look at the signal logic for a long. The code measures the lower wick of the newest closed candle by subtracting its low from the lower of its open and close. The Boolean named tag checks that the candle dipped into the gap. The Boolean named held confirms the close stayed above the gap floor. The Boolean named rejected requires a bullish close together with a lower wick at least as large as the wick factor times the body. When all three are true, the EA reads the ask as the entry, sets the stop just below the candle low or gap floor minus the buffer, computes the risk as entry minus stop, projects the take profit at the reward multiple, and finally calls trade.buy to send the order. The sell side mirrors this exactly using the upper wick and the bid. Let's watch the strategy play out on this illustration. On the left, a small candle is followed by a powerful bullish candle that surges upward. That impulse is so strong it leaves an empty space, the green shaded box, between the high of the first candle and the low of the third. That is our bullish fair value gap. Notice the EA does not buy here. It waits. Over the next two candles, price drifts back down and dips into the green zone. Watch the fourth candle closely. Its lower wick stabs deep into the gap, but the candle closes back up near its high, leaving a long tail beneath it. That is the rejection the strategy demands. The buy entry triggers right here, with the stop tucked just below the wick and the gap floor. From there, price resumes the uptrend, climbing candle after candle until it reaches the take profit level at the top, twice the distance of the risk. The first trade is complete. Now the market shifts. Near the highs, a strong bearish candle drops sharply and carves out a new imbalance, the red shaded box, this time a bearish fair value gap. Again, the EA waits patiently. Price rallies back up and pokes its high into the red zone, but the candle is rejected, printing a long upper wick and closing back down below the gap. That is the sell signal. The short entry fires. The stop sits just above the wick and gap ceiling, and price rolls over and falls to the take profit below. Two clean continuation trades, each built on a genuine rejection. This sequence is for educational purposes only. And that wraps up our breakdown of the FVG Rejection Continuation Expert Advisor. We covered how it detects a 3-candle fair value gap, how it filters for strong displacement and freshness, how it waits for a true rejection wick before entering, and how it builds its structure-based stop-loss and reward-to-risk take-profit. Remember, everything in this video is for educational purposes only and is not financial advice. If you found this helpful, please hit the like button, subscribe to the channel, and drop a comment letting me know which strategy you would like me to analyze next. You can find more strategy breakdowns and resources over at www.algobot.live. Thanks so much for watching, and I'll see you in the next one. Past performance does not guarantee future results. Trade responsibly.